Hello everyone, this is your host the Cowboy and welcome to Elliott Wave Cafe. Well, welcome to what I want to be a new series in here that's going to be called the Chart of the Day, where we take a look at different stocks and cryptos and we try to come up with our best interpretation in terms of the Elliott Wave count. So every single day we're going to take one chart and we're going to dissect it and kind of see how it looks, and I'll kind of let you take a shot of it and see how you're improving, if your counts compared to mine, or if you have something else that makes more sense. Just let me know in the comments. Also, if you wanted to have a look at specific stocks and specific cryptos, just let me know and I'll try to choose something from the comments that I'm getting. So anyway, this is a chart of ARKK ETF, and we're going to try to count this formation starting from 159.70 all the way to these lows at about 64.80. We're going to try to come up with our best interpretation. But before I do that, why don't you take a shot at it and see kind of how you can label it? You can stop the video here and just kind of have a crack at it and see what's your best count. But I'm going to go ahead here and start counting and just kind of tell you what I think. This is not going to be a long video. What I'm going to do is I'm going to keep it kind of short, and we'll do one every day and just pick a different stock, and then this way you guys kind of get to see how I'm doing this live, and then see if it hopefully improves your Elliott Wave analysis. So what I'm seeing basically in here, I'm seeing a pretty strong decline of this highs, 159.70. Then I'm seeing a corrective move and then another decline. So what this does, it tells me that this is a very kind of clean three-wave move, I should say, right? So you go up and down in an impulse, up in a correction, and then down in an impulse. Then I'm seeing another kind of messy type price action back in here, which sends me to believe, well, this is another corrective move. And then since this 125.86 high, we've dropped lower in a pretty strong impulse. So this is kind of where my mind goes. What I'm usually doing, when I see a chart like this, I'm starting to identify the three-wave moves and or impulses. So what I usually do is I go and I pick up my correction tool out of Motive Wave, and I go and I start at the high and I say, well, if this is a three-wave move and this is an impulse, then this has got to be a wave A. Because corrections, are impulse, correction, impulse, and if you have an impulse in a correction, you can only label it as a wave A. So you go down in A, and then this back in here, it does look like a triangle to me if I'm kind of looking at it the right way. Going up in A, down in B, up in C, down in D, and up in E. So this would make a triangle wave B, and then you come lower and you sell in another impulse, and that becomes a C wave. So now I have my first move off this highs to this lows in a three-wave. Now I gotta deal with this mess back in here. So how am I counting this? Well, I'm noticing that I do have a pretty good impulse out of this move, right? I'm noticing a 1 here and a 2, maybe a 3, a 4, and a 5th wave in here, right? And this looks like a strong impulsive kind of price action that comes and overtakes this B wave high. And let me just put the lines on the triangle so you can kind of see where it's at, right? So that's one of the lines, and then this is the other right there. So that's our triangle, A, B, C. Now I'm looking at an impulse, and then I'm looking at the correction, and look how nicely this correction is kind of, it's really well stays between these two parallel lines in there. So this move out of here, it's what kind of splits this whole advance from this lows to this move in here. This whole thing here, I think it's part of one structure because it's split by this corrective move kind of moving sideways in here. I'm looking at this as being highly corrective, right? It's a lot of overlap, it's contained within these parallel lines in here, and then you're having a burst of an impulse out of that move. So then what I do is I take again my corrective tool and I go, well, if that's an impulse, which seems to be, I go up in A, just like I did back in here. Then if this is a correction, this is the lowest point of that correction, then I label that as a B. And then if this looks like an impulse as well in a 1, 2, 3, 4, and 5, I'm looking at that as a C wave. So now what this does, again, is just kind of labels this advance from this lows here to this swing high as a correction move. Now you might ask yourself, well, the C wave is not higher than this A wave, which is totally fine. It doesn't have to. It's not a rule that the C wave has to go above an A wave in a correction, but it does have to look that is, that is an impulsive move, and it fits into the right count, into the right kind of a setup. So what we call this a truncated C wave that falls to overtake the A wave high. It would have been better if it did, but it didn't. But it's definitely an impulse. And then you're coming from this highs here, right, of a C wave at 125.86, and you're looking lower, and you're noticing a pretty strong impulsive move. But there is something that catches my attention. And what catches my attention is this move right in here. That's the biggest corrective pattern of this decline. And it does smell to me like that's a triangle. So what I'm going to do is I'm going to go in A, B, C, D, and E. So we're going to connect here the BD line and the CE line. We're going to go like that. So it's A, B, C, D, and E right there. And then you have a triangle right in there. Now, if I count from this highs to this lows, I can see a pretty clean 5-wave decline. So I go in a 1, 2, 3, 4, and 5. So what this does, that makes the first decline. That's corrective. And then from there, I'm looking at another decline lower, which starts as a 1, 2. Right in there, you got a swing. So 1, 2, maybe that's a third, that's a fourth, and that's a fifth. So my best interpretation at the moment, it is that this is another corrective pattern. That's part of the larger move. So you go down in 5 wave, that's an A. You go up in a B wave in here, and then you go and you try to finish the C wave decline. Now, we don't have any way of knowing if this is correct or if this is how, the market will react. From these lows, we're going to push higher, remains to be seen. But this is kind of what I'm going with at the moment. I'm thinking that this is a wave, a declining wave, part of the larger correction. And I'm looking at it as an A, up in B, and then down in C. Now, some of the signs that I'll be looking for to see that my decline here is correct, my interpretation is correct, is for the market to start climbing above some of these key levels. So the first one here is about 78.25, and the next one, it's going to be this swing in here in a B wave, that's about 97. So the moment the market starts to break above these levels, it starts to signal to me that this correction might be complete, and you could be moving to new all-time highs in this ARKK ETF. Or at least have a sizable bounce, let's say back towards 125. So now how do I put all this together? Because for right now, you just have a bunch of, counts in here, and let me just kind of increase the degree in there to kind of match everything else. You go in a decline here, correction, correction, correction. So what's going on here? So you have the first ABC, and what that tells us is that this is a complex move. So you go in a combination. I take my combination tool from the software in here, and I go and I place this as a W right in there, and then I go up in an X, and then I go down in a Y. So what this automatically does, it automatically puts it into the intermediate degree, so 1 degree higher. You can notice here you have your letters here in parentheses. So you go W, so that's the first decline. Then you have an X wave. X wave comes very, very close to the B wave, which is usually what happens in a combination here. So you go W, X, and then you go in an ABC. Now, the only issue I have with this count is the fact that this move in here, it's highly impulsive, right? So it could be that I'm, wrong in my approach, and maybe that's a wave 1, that's a 2, 1, 2 in here, and then you have 3, 4, and 5, 4, and 5, and you're just kind of sliding lower. And this becomes, let's say, a different structure that I'm not aware at the moment. But this is my best interpretation right now. And I'm going to go with this because, I kind of like how it shapes up. So I'm going to keep this as a primary, right? And then if I want to switch over to, let's say, this is a 2-day chart. If I want to switch over to a weekly chart, what I'm looking at is I'm looking at a very strong impulse, and I'm noticing, a move coming back down against this impulse. And what I usually do is I take a retracement tool and I place it back in there, up at the top. Now this is a log scale, and I'm noticing that we're coming dangerously close here to the previous high back in there, and then we're coming also into the 618. So it's something that I want to see from a corrective setback. this tells me that this move, it's kind of running towards the end of the correction, and kind of combine that with the sentiment regarding ARK and some other, let's say, indicators out there. You can start to assume that there could be an end to this move. So this is the way I'm kind of trading this count, and I wanted to present it out there. And I want to show you another little trick in here. And you probably, if you're familiar with the channeling or not, but it's something that I definitely like to kind of use when I use corrective patterns. And what I do is I take a channel and I run it from the top here. And you gotta kind of have to do this while the moves are happening. So first of all, you want to connect A with B, and then that's going to give you the lower channel. Then if the market moves higher and give you an X wave, then you can do, a top of the move there, with an X wave, and then just kind of do it from the swing low. And you can see how the market broke below here, went back and retested it and came down. But even one that's even more important is this one, where you go and you connect the origin of the move here with the secondary B wave, and then you swing that, and then you notice how the market stops right there, right at the channel. So this kind of, once you have a move like this and you're channeling it like that, that usually tells you where the moves are going to stop or to the downside. So this is kind of what we're having so far. I'm going to delete this, but go ahead and use channeling. Channeling is really important as well. And I'm going to keep this, I'm going to save this, and we're going to maybe revisit this, I don't know, in a month or 2 months and kind of see what happened to this count. But this is the first chart in the new series that I'm going to call it, the chart of the day. We're going to take a look. I have a few others into my pocket back in here that look interesting, and then we'll just continue to move. So if you like this, hit the thumbs up, the notification bell. Let me know what other counts you want me to look at. If you see this in a different way, let me know what you're saying, and let me know what other charts you would like to see as well. So thanks for watching, and I'll talk to you later. Bye bye.